Eric Mother at Mother.com, July 19th, 2016. Let's take a look at markets here with about 49 minutes, 50 minutes to go before the close of this trading session. Markets pretty much been stuck in a range for the day. Let's take a look at the charts. Let's begin by taking a look at the NASDAQ daily. And here we can see that over the last couple of days, market's been coming back to test the top side of the daily RSI as we discussed in the past weekend, and still continues to be the case. You get top side resistance coming here. So that's one layer of resistance. And then of course we've got the other layer of resistance, which is, we can call it negative divergence. Markets have made a slight higher high here. RSI has not. Okay, and also we are coming back to test the break level on the daily. So this NASDAQ daily chart by itself does raise a question as to whether the market has enough energy to break through and above the RSI resistance. As you can see, it's been a problem since that red line break here, which is this slight pullback, and then resistance since then. This is where the market has been stalling. So we are coming back on the RSI. We've hit that line almost 3 times and we are stalling. So around here, a pullback makes a lot of sense based on that NASDAQ daily chart. This can also be seen if we take a look, for example, at the S&P 500. And here I'm going to let's take a look at the daily chart to your left under the menu tree. And again, you can also see for the S&P 500, coming back to test the top side of the daily RSI potential resistance level, which is the top side of this line here. We've hit that twice with a double top, and also right now coming back to test the break level again. These are levels we've been watching over the last couple of days going into late last week, still coming into that resistance level. You can take a look at the Dow hourly. Let's go to the charts again to your left, just so that, and we can see on the hourly, it's hard to see here, but I can, so this is what it looks like on a 6 months basis, 3 months. Let's go back to about a month. And I just want to show you that on a monthly chart with the RSI here, what we can see developing is an improvement in price highs, but the RSI has been making a lower low. That might set the stage for a pullback. We take a look at the 30-minute chart for the Dow, and again the 30-minute chart for the Dow charts to your left under the menu tree, improving highs in price. RSI did not follow through. That negative divergence does set the stage for a pullback. We continue expecting and anticipating that pullback at any moment. Take a look at the Dow Transports weekly, and you can see here a little bit of a busy chart, so I'll just make it a little bit simple by drawing one line. So forget about how the chart looks too busy, but there's a line right there. That blue line takes away all the noise. You can see that this was resistance on this blue line for the tops there, coming back and hitting that level. We are down for the week so far, so that resistance has been confirmed on the transports on the weekly chart there. And if we take a look at other sectors, for example, take a look at the XLF on the weekly. Yes, it's come off the lows here, nice rebound, but we are coming back to test the top side as we've been discussing, coming back to test that line, coming back to test this break point. The market so far has not moved above those 2 RSI resistance levels. We continue expecting a pullback based on resistance on that line. There's another chart we can take a look at, general market behavior. It's for the biotech space. As of right now, we've been watching the 50 RSI level for potential resistance on the biotech space, because this is where it's been stalling. The RSI has been coming back to this 50 zone level and showing uniform activity rejection and pulling back. Right now we seem to be doing the same thing. So net, without having more information, which is by way of using what we have in front of us, the biotech space also, it seems to indicate that the market here is where it could start pulling back. Now, not to be too carried away with all the pullback talk, the key for the market is very simple. As long as the S&P 500 is breaking out, so as long as this breakout is taking place, we can continue expecting the market to be good. So in other words, let's say even if those weeklies and daily charts and hourly charts do suggest a pullback, but at some point if the market can just pull back and continue building above the breakout level, for example here for the SPX, of course it's 2107.39, anything above that for the S&P 500, and the market still remains bullish. So even with a pullback, it just depends on the level of pullback, the magnitude of a pullback, and the velocity. Anything above that keeps it above 2107.39 on the SPX, and the general market should still be okay. So yes, we see pullback possibility on some of the charts we mentioned, but the key is how the monthly charts respond. And of course for the Dow, it just needs to remain above its 2015 prior all-time monthly closing high. So the Dow just needs to hold above this previous monthly closing high. Anything above that, even with a pullback, suggests that the market should still be okay to the upside. And of course for the Dow, that level is 18132.70. Anything above that should be bullish for the general market. I want to take a look at the dollar chart for now. As of right now on the daily, there is a short-term move above this recent resistance level here. So as long as the market is holding above that buy point on a daily chart, we start anticipating the possibility that the dollar wants to probe higher levels. So anything that keeps the dollar above, or the UUP above 24.78, which is this prior daily closing high, anything above that, and the dollar might have a chance of moving higher. So let's just watch that, because that might have some negative implications for commodity prices, and that is similar to the dollar itself. So that would be similar to the dollar index on the daily. Whoops. So for the dollar index, that would mean that the dollar would have to trade above this previous recent daily closing high over the last couple of weeks, and that level for the dollar is 96.70. Anything above that, and the dollar might have a chance of creeping to the upside. And as a way of potentially taking advantage of this move, we take a look, let's say, at the USO, which continues to struggle. And the theory here and the thesis is that as long as we are trading below 30.9, we should still reasonably expect this to test these lows here. So let's just expect that crude oil might test the lows here if the USO continues trading below 30.9 on its monthly RSI. As a way to play this, we've been watching SCO on the monthly, because the monthly is coming back and showing support on this 50 RSI level. Of course, the last time it bounced above that was here, which was holding at the 50 level on the monthly, and it had a nice recovery move higher. So the idea here is that as long as this is the support on the monthly, it could see higher levels. And also, of course, SCO and DTO have similar looking charts. So the way I would play this is based on the daily chart, is just to set an alert should the DTO move above the recent daily closing high. And the daily closing high level here to watch for DTO is a breakout above the recent daily closing high of 137.36. Anything above that, any breakout above that, might suggest that this is in play and could be setting up for a move higher. And the level to watch for SCO, of course you only need to own one of this. The level to watch for SCO is a breakout above the recent daily closing high, and here the level to watch is any movement above 94.70. A breakout by one of these two above the recent daily closing high could suggest that they are in play for a momentum move to the upside. Those are the ideas for now. Of course, I'll keep you posted. Eric Mother, Mother.com. As always, good luck, peace, and blessings. EACS.